is an important tutorial about how to improve the perception of the credit department as a key part of the management team in your company. We're going to talk about how you can broadcast the department's value proposition. So we have several learning objectives. First of all, managing senior management expectations versus the reality of today's difficult business environment. First of all, let's talk about what are the expectations of your senior managers today versus the reality in the marketplace. Their expectation is that there's a focus. They want to have revenue growth or at least revenue stability, and they want to have cash flow and liquidity to reduce the need for borrowing and the cost that's involved there. They want to manage the risks, but they also want tight credit policies and controls and aggressive collections. So this can be counter to revenue growth, actually, and it could have a positive impact on cash flow, but with tight credit policies, it could be limiting on the revenue opportunities. The reality is that today it's hard to accomplish days sales outstanding targets. And in many industries, there's a slowing payment pattern due to the slowdown due to the pandemic and other factors. And there's a higher potential for bad debts through small business bankruptcies and even larger companies filing for bankruptcy. Customers may be leveraging deductions. If you have a business where there's an opportunity for customers to take deductions, you may find that the customer is leveraging that opportunity to slow payment down, causing expense, research, and so on at your end. Many large companies for a number of years now have been pushing their suppliers just arbitrarily to extend their payment terms. This also has quite a negative effect, not only on DSO, but it could have an effect on risk. The pandemic has disrupted what we perceived as normal business practices and staffing. People are working remote. Companies have had to downsize. It's really had a drastic effect. So the credit department has to understand and comply with all these legal requirements and regulatory requirements that cover what we do on a daily basis. So you look at the expectation of revenue growth, cash flow, tight credit policies, but enabling that revenue to happen. And then you look at the reality in a very difficult business environment. So how do you improve your perception of your department when you have these competing expectations versus reality? Well, you have to start by thinking like your boss. How could the department bring the most value to the company from your boss's perspective? How would it be staffed? How would it be organized? If you were to start all over again, how would your boss see that as happening? Is significant FTE, full-time equivalent time, now spent on things that are just non-essential functions for your department, things maybe over the years your department has been asked to do, but they're really not core to credit, collections, dispute management, remittance processing? Can there be non-critical functions that can be outsourced so that you can take your limited staff and really focus them on what gives your company the best return on its investment in your department? What would the department's critical functions be? If you are doing some things that you don't think are essential, what would those essential elements be from your boss's perspective, not only yours? And how can your department best support the company in today's environment? What is the best use of your time and resources? And you're looking at it from senior management's perspective, and it can help guide you.